Someone asked me, said, can you really get a business loan with a 500 credit score? And the reality is, yes, you can. Here's the thing about it. The way you get the business loan with a 500 credit score, you have to have some type of revenue going on. All right? A lot of people, they have it in their mind, unfortunately, that because I got a bad credit score, I don't have nothing to offer, I still can get $100,000. It don't work like that. That's being naive, and I'm not disrespecting anybody. I'm just telling you, don't be so naive to think that. Now, again, in terms of the type of lenders you're going to go to when you have a 500 credit score, they're going to be predatory lenders. But again, the key, and I do mean this, the key is making sure that you have some revenue. Now, in terms of what type of revenue, then again, that's a different conversation. And so what I mean by that is that there are lenders out there that even if you're making only $1,500 a month, they will still give you a loan. Now, those type of loans are merchant cash advance, right? And so with those type of lenders, you're looking at like Fundo, right? So with Fundo, they'll give you a $10,000 loan, right? Now, please understand with Fundo, they don't operate in all states, but there's 3 criteria, all right? So their criteria is, 1, you have to be in the gig economy. That's who they work with, people in the gig economy. So if you're doing Uber, Lyft, DoorDash, if you're doing handyman services and stuff like that, they will work with you, all right? So that's number 1. Number 2 is that you have to have an active bank account that you're receiving deposits. Now, does that say business bank account? No. You don't have to have business bank account in order for them to give you a loan. But you do have to have a bank account that they can verify that you are receiving income from a gig. So meaning that no disability, no welfare, you actually have to be generating income. All right? So that's number 2. Now, the minimum income that they say that they accept is at least $1,500 a month. So if you're making at least $1,500 a month, they're able to help you. All right? So that's the first one. Now, the second one I tell you about is Giggle Finance. Okay? So with Giggle Finance, although they only go up to $5,000, again, if you're in the gig economy, they will work with you. All right? Now, the thing about it is, again, they want you to be making at least $1,000. You have to be in business for at least 90 days, same as Fundo. You have to be generating revenue for at least 90 days, right? So there are places for you, even if you have a 500 credit score. But again, the thing about it, you have to understand is that you must have revenue coming in, some type of revenue coming in on a consistent basis. Now, one of the things I continue to tell you guys, if you're in the gig economy, if you are a handyman, if you're working online, you should have either a PayPal, Stripe, or Square account set up. And the reason is, you should be, whenever you're getting money, having that money go to one of those accounts. The reason is, when you have deposits going to those accounts, those lenders will give you a loan as well. All right. Now, my favorite is my favorite is PayPal. Now, the reason my favorite is PayPal is because they give you the working capital loan. Now, here's the thing about it with the working capital loan. You average annual revenue is only $33,000 a year. Okay, right? Now, the other thing about it, 560 credit score, but actually, if you have high enough revenue, they have other loans that they can give you as well. So that's the reason I tell you guys, have a PayPal bank account, okay? not a PayPal bank account, but a PayPal account, business account. All right. So by you having a PayPal business account, that's actually helping you. All right. Now, the reason it's helping you, because you can be making it anywhere from 15 to 20,000, and PayPal usually give you a loan up to 30% of what your revenue is in. All right. So that's some other lenders. All right. Let's talk about SBA. And I just put out a video about SBA and the hidden credit score that people don't even know about the SBA. The SBA has a hidden credit score that most people are not aware of. It's called the FICO Small Business Scoring System. Okay? And so whenever you get or go for an SBA loan, and if you are an existing business, and you're trying to get over $50,000, they're going to pull this report, okay? And so they have a scoring system on this report, because this is going to tell them the history of the business. They're going to look at the personal credit. They're going to look at the revenue, how many employees. This is what I'm continue to tell you guys. That's the reason I always said there's more than one credit score. There's always more than one credit score. So with SBA, usually they look at your personal credit from Experian. So remember I told you guys how important Small Business Financial Exchange was. Small Business Financial Exchange is more important than Dun & Bradstreet. See, Dun & Bradstreet gets their information from Small Business Financial Exchange. That's the reason I continue to tell you guys, you don't have to have a DUNS number or buy a Dun & Bradstreet product in order to get qualified. You don't have to do that. Now, there's the SBA, going back to the SBA, you can have bad credit, but you're going to have some type of collateral in order for them to want to help you, okay? So that means if you're trying to open up or trying to buy a franchise, as a matter of fact, they even have a separate score when you're trying to do a franchise. That's right. There's a separate scoring system when you're trying to get a loan for SBA to do a franchise. And again, these are the things that most people are not aware of, right? So the thing about it, if you have income, but your credit is bad, then the SBA looks at the income. They're going to look at 2 years of taxes. They're going to look at pay stubs. And if you need pay stubs, we can create the pay stubs for you. But these are things that they're actually looking at. All right. So you have multiple lenders. Now, Fair Figure. If you have a 500 credit score, it doesn't matter. They will give you a loan. The only factors that they have in place is that you've been in business for at least 90 days and you're making at least $2,000 to $2,500 a month in order to qualify for them, because they use a Fundex score. So their Fundex score is at least a 30 in order to help you qualify. Now with Fair Figure, if you don't know, with Fair Figure, they're like NAV, okay? So they collect business credit information and stuff like that. So they'll verify your business and stuff. You attach your business bank account. They'll verify the income, revenue coming in monthly and stuff. And that's how they determine. So when I tell these people, hey, don't decide to go and try to make up your pay stubs and stuff like that. You need authentic pay stubs, because they connect your bank account to Plaid. All right. They connect it to Plaid, or there's another one called Decision Logic that they're going to use to verify that you have real revenue coming in. And if you make up pay stubs, and if they decide they're going to look at that bank account and those information is not matching up, then you just put yourself in another situation. But if you need pay stubs, if you need help with raising business capital, personal capital, removing negative items, click the link in the description. Schedule a one-on-one consultation.